Now let's focus on the business of climate policy. The continent's first verifiable emissions reduction platform, CYNK, has announced a landmark carbon forward trade of over 2 million credits. Now the statement came at the Africa Climate Summit in the Kenyan capital, and it represents the largest worldwide launch deal of this sort to date. CYNK is a Kenya-based end-to-end platform. It's designed to measure, verify and sell verifiable emission reductions, or VERs. The platform is designed to enable funding for the full life cycle of projects that aim to both reduce emissions but also have a broader social impact. CYNK management say the platform is the first carbon offsets exchange in Africa, but they did not provide details on who the beneficiaries of this initial launch trade are. Right then, so let's explore how these carbon trading systems can work in frontier markets here in Africa. Sudu Arumugam is the chief executive of CYNK. He's joining us now live on the program. Sudu, thank you for your time this evening. So let's start with the example of Tamua. How does CYNK's platform help a company like that deliver carbon credits to the market?
Yeah, so Cynk is a marketplace for the financing, generation and trading of carbon credits. And the project that we got on this week is very typical of carbon projects and carbon producers out there, in that they face the two sort of biggest pain points, which is the financing of the project itself at the start, and then navigating the complex world of getting certified, and so that your credits could become issued and sold on the market. And Cynk helps on the end-to-end solution for carbon producers around Africa.
All right, then, so who's responsible for verifying these emissions that eventually do come to market? How do we say that these emissions do qualify? These are the projects that essentially are backing them.
Yeah, so if you look at the verification or certification space there in the world, there are a number of registries, but there are four that dominate. They are Vera, Gold Standard, American Carbon Registry, and Pure Earth. And so when we look at the landscape, we will help the project get certified by one of the big four, because without that certification, the corporate buyers in the global north will not buy these carbon credits. And so we will hold your hand through the whole stepping process of getting certified, which could take up to 18 months to 2 years typically.
How does that work exactly? And the reason I'm asking that is because you've got all these farmers, for example, small-scale farmers who'll say, hang on, but I've got trees on my farm, I'm practicing agroforestry. Perhaps, right, I am providing an environmental service by having these carbon sinks on my farm. So how then can I tap into the market that Cynk offers?
Yeah, I'm sorry, I lost you there on the question.
Does this verification process effectively lock out small-scale farmers? Because the question they might ask is, we might be practicing agroforestry. By the virtue of the fact that we have these trees providing a carbon sink, we're essentially providing an environmental service into the market. Therefore, how can they become a part of these verifiable carbon emission credits on Cynk's platform?
Yeah, it's a great question. It's actually a debate that's going on right now in the market, but the way that the carbon credits are defined right now by the global north and by institutions generally who buy them, it's around additionality. So would you carry on doing something, without the help of this finance, or would this finance help you do a new project? And of course, additionality makes complete sense. But there is this other strand of thought going that, why would you not compensate somebody who keeps land and acts as a carbon sink in any case, even though they don't do anything out on top of it? Yeah, a very simple example is, if you have a farmer with a bunch of trees, sinking carbon for years and years. Well, the way that's written right now, the legislation in terms of licensing and certification, is that you kind of almost like encouraging them to cut the trees down, claim, and then regrow it to claim the credits, which does not make any sense, right? And I think that's the point you're getting at.
Indeed. How does this system handle revenue sharing? Once a company, say, comes onto the platform, they've been verified, they're then sold on, where does the money go from there? Is it all of it going into the firm that benefits?
Yeah, so remember the period from the financing or starting of the project to the actual first issuance could be 1.5 years or 2 years. So what we do when the credits become issued by these big four agencies is that we then take those credits as issued and put it into the wallets or the accounts of the investors. And so the investors at that point have these issued credits, and they can do a couple of things with it. They could sell it on our marketplace for dollars, or they could retire it. But the choice is completely theirs.
What's the sort of price that we're looking at for these carbon emissions? Because some of the numbers that I see coming out of voluntary carbon markets is about $40 to $80 a ton for a ton of carbon dioxide. Are we looking at a similar range of prices?
So it actually depends on the type of technology or the type of carbon credit you're creating. So there are essentially two broad types. One is sort of avoidance, and the other one is capture and permanence. And so really avoidance is where you sort of do something that sort of temporarily doesn't release the carbon, but it gets released by a second process. Permanence or capture is when you sort of capture it directly from the air and put it away. It could be in the soil. It could be in mechanical instruments, for example. And so the longer that you can put it away, the more valuable it is. So an avoidance credit might trade from $5 to $15, and a direct air capture or type of technology could be hundreds of dollars. And so it really depends on the type.
All right, one last question for you. What's the total addressable market like for these emission credits, at least within East Africa? Because I recognize that the market for this sort of thing is fairly large. But within East Africa, how big can this market scale up to?
Yeah, so the voluntary carbon market is actually very, very, very small compared to the compliance or mandatory market right now in the global north. So the voluntary market or VCM is around $2 billion a year. The mandatory or compliant market is almost $1 trillion. So you can see the potential to grow. A lot of investment banks and Bloomberg and a lot of them sort of came up with some estimates very recently, and the range was typically they saw the market going from around 2 billion a year right now to 100 to 250 billion a year by 2030, and towards 750 billion to $1 trillion per year by 2050.